Can Prologis finally take control of its own stock destiny? Here's a longtime Cramer fave, believe it or not, since 2008, a real estate investment trust that mainly owns warehouses, logistics facilities for e-commerce. Though the stock's rallied over 30% from its lows last October, it's basically been trading sideways for a little bit since the beginning of the year. When Prologis reported a couple months ago, the results were mostly in line with more or less solid guidance, even as there was some hair on the quarter and the stock pulled back in response. But management also gave us some optimistic commentary on their largest market, Southern California, and they noted that they'd make some big money in the red-hot data center business. We're going to talk about that. Don't take it from me, though. Let's check in with Hamid Moghadam. He's the co-founder and CEO of Prologis. Get a better sense of the story. Mr. Moghadam, welcome back to Mad Money.
Thank you, Jim. It's always great to be with you.
Oh, thank you. You're in a business where you do see the future. And I think that what happened, tell me if I'm wrong, but there was this momentary overbuild, but that is now over. And if I look at the rest of 2024, this is the time to buy.
Well, that you can decide.
Well, I will.
But I'll give you the facts around supply and demand. In our business, it's pretty easy to forecast supply, at least out the year, because in order to deliver a property, you need to have started construction already. So we can look out on supply a year from now. Not a lot of mystery around that. It's going to spike, and then it's going to come back down because a lot of people can't start new projects. They can't get financing. They can't get the land. And the markets have gotten much tighter in terms of availability, capital, equity, and debt. So we see this supply surge that's coming on just declining as we approach the end of this year. The bigger question is demand, and demand is really dependent on interest rates and what happens to that trajectory. But we think demand is normalizing. It's not falling off the cliff or anything. It's just not as crazy as it was a couple of years ago. But it's pretty much in line with any year prior to 2019. And the combination of these two is going to make vacancies bottom and then come back up. And we are already at 97%.
I was going to say, before we start really talking about dire, almost every one of your markets. And then also when you moved overseas, Mexico, 99%. I mean, you've got some unbelievable numbers.
I just came back from Mexico. That place is on fire. There's so much manufacturing moving to the northern cities of Mexico and that drives consumption in Mexico City and other places. So Mexico is doing really well. Brazil is doing really well.
Yeah, I know. Some of these countries are very stable and when we have a misperception about them. You mentioned land, acreage. You have enough land to put up more places. The other guys don't?
Well, and it's all a matter of scale. We have 1.2 billion square feet of existing real estate. We have land that we control or we bought or we have access to that can produce another 200+ million square feet. Now, I throw around these numbers. They're big numbers. 200 million square feet would be bigger than any other REIT, a couple of them combined.
There you go.
So we have a lot of control over our growth in the coming years. And land is getting tougher and tougher, so it's a good thing to have.
Okay, how do you decide what to put up? Because I saw you do $500 million in data centers. We all know that we are data center constrained. Is that something that you should be putting a lot of chips in?
So the great thing about the logistics business is that you own the cheapest house in an improving neighborhood. So that's the lowest land use. In the days where there was an office market, office is always an upgrade, retail is an upgrade, and data centers and life science are an upgrade today. So what do you need? You need a flat piece of ground, you need access, and you need access to power and fiber and water. And a lot of our properties meet that criteria. Not all, but a lot of them. So we've mapped the portfolio for all these opportunities, and we think we're going to be doing on the order of $8 to $10 billion of data center development in the next 5 years.
Wow.
Now, we got to line up the power for some of those projects. They don't all have power, but we have 100 people in our energy group because we've hired these people to build our energy business, which is primarily solar, utility scale storage, and mobility. And those people are talking to the utilities all the time about supplying them with renewable energy.
Oh, kicking it back.
So we have knowledge and experience in dealing with utilities to secure power. Doesn't mean we're going to get it everywhere, but we got a better shot at getting it than most people.
In the meantime, people need to understand the mosaic of business you have. A lot of people might just say, well, maybe they're 25% Amazon, maybe they're 25%. You have a unique advantage over everybody. There's no one who's that important.
Well, yeah, exactly. We're their largest landlord, and they're about 4 to 5%, depending on when you look at it, of our portfolio. And the next customer is less than 2%. So the rent rolls are very, very diversified, and we're 97% leased. So.
Now, when I listen to you, it makes me think we've got a big Federal Reserve meeting this week. I don't like to talk about the Fed because we don't know what Jay Powell's going to do. But it does make me sound like that maybe interest rates did get a little too high if you find yourself in a situation where some of the people you're up against are constrained.
The people we compete with, particularly the private companies that are dependent on bank financing, are having a very difficult time getting construction loans. Because a lot of these banks have office building loans. Those are in trouble. So they're...
Right. It comes under the same category as commercial real estate.
Exactly. So that gives us a window of opportunity because we are only 20% levered. We've got a single A balance sheet, and we have access to capital, and that's not an issue. And really, it's customers that guide us as to where we go and what we do. And we listen. The thing about real estate companies, Jim, is that they're all about the next deal. The next deal in a company our size doesn't move the needle. We got to be about the customer. We got to put the customer in the middle of the business. They tell us everything we need to know. We don't have to guess about it. They share their growth plans because they want us to be there with property when they need it.
And it's one thing that is clear. It's not like e-commerce is ground to a halt.
No, not at all.
It's the opposite.
No, quite the opposite. E-commerce did about 10 years of growth in the 2 to 3 years of COVID, but it didn't stop there. It's continuing to increase in terms of share. People look at quarterly numbers too much. If you look at annual numbers, you see the trends much clearer.
Well, I know from the way your business worked, even during the Great Recession, it's about as recession-proof as you can get. Again, that's my judgment. As a stock guy, looking at a lot of other companies don't have the stability that you have. That's Hamid Moghadam. He's the co-founder, chairman, CEO of Prologis. And yes, indeed, since 2008, we've liked the stock. That bunch back in.